Morning traders, Greg here with a market update. Okay, so there is something very important happening in the market at the moment that is getting a lot of focus, and that is the rise in US bond yields. Okay, so when the Federal Reserve starts its cutting cycle and when it achieves success on inflation, you'd expect that US bond yields would be trading lower. That certainly was the case initially, and we did have US 2-year yields down towards, and 10-year yields down towards 3.5%. But in the last few weeks, we have seen a very sharp rally in both, and we now have US 2-year yields back above 4%, and we have 10-year yields now at 4.2%. So they're actually up almost a whopping 70 basis points, which is a very, very big move. Okay, so there is a few reasons of why this is happening and also why it is important. The first reason why it's happening is because US data has been good. Every single time in the last month we've seen any US data from payrolls, which was well above expectations, retail sales as well, and manufacturing. They've all printed positively and above expectations. So it's basically saying that the US economy is still exceptionally resilient, it's solid, and we're certainly not going into an imminent recession. So now, the need maybe for the Fed to cut as aggressively, maybe not the case. So yes, look, we probably still obviously get another rate cut in November, 25 basis points, but there are calls from the market that maybe, the Fed will pause after November. So that's one of the reasons why US bond yields are higher. So it's, they've followed, the good US data higher, which normally happens. The second reason why is, and something that's getting a lot of attention now in the market, is what's happening obviously with US debt. So US debt is at record levels, above $35 trillion. The US now is adding $1 trillion of debt in less than 100 days now. And a lot of the market is looking at this as being unsustainable now. And so what happens then is that any bond investors will want a premium for buying US debt. So they're going to want and demand a higher yield. So that's another reason why we've got these bond yields higher. And finally, another reason why bond yields are sharply higher is also the bond market's starting to price in that Trump is going to win the election. Trump's biggest policy is tariffs. And tariffs, and the way that Trump is aggressively going to impose tariffs on the whole world and more so on China is going to be inflationary. So obviously then bond yields will follow inflation, and there's a case also that maybe the Fed may have to start raising rates again at some stage early next year. So so yes, bond yields are higher, and they do look like potentially that they have more left in them to continue higher. Some of the most famous hedge fund managers in the world, Stanley Druckenmiller, his biggest position now is betting against bonds. So he is actually short bonds in very big size, looking for higher bond yields. And Paul Tudor Jones, another big famous hedge fund manager, yesterday came out and said that after the election, he will not be owning any US Treasuries, and he will actually be selling US bonds. So there's some big heavyweight names, some big heavyweight bets, betting that these bond yields will continue higher. Okay, so US bond yields going higher is why we have this stronger US dollar. The US dollar follows US bond yields, and especially when US bond yields outperform the rest of global bond yields. So we've had the dollar index DXY, which was trading down towards 100, and the market was aggressively selling US dollars for a break of 100, and now that has totally turned around, and the dollar index has actually gone up 4 big figures, 400 basis points, and now trading up towards 104. So there is you can't be selling US dollars when we're seeing such a sharp rise in US bond yields. Now on the other side of the coin, looking at the Eurozone, they're in a totally different situation. Their economic data is deteriorating badly. Growth is deteriorating badly, and inflation is actually falling, and falling where they're actually looking for it to be below target in early 2025. So there's calls that the ECB is actually behind the curve, that they have to cut more aggressively, the complete opposite of the US. Their next meeting's in December. There's growing calls that potentially we might even be looking at 50 basis points. That's why Euro's below 108, and that's why Euro will continue to go lower, and I would not be recommending buying these dips. Okay, so moving along. Geopolitical risks are obviously with us the whole time. We did hear last night some headlines that Israel's Channel 12 came out and reported that the Israeli strike on Iran will happen in the next few days. So gold listened to those headlines, and we saw gold do what gold's been doing and trending exceptionally well, and make new record highs. Opening Asia here at the moment just below 2750. Obviously, we break 2750. Next target is going to be up towards 2800. And this is without even a bomb drop between Israel and Iran. So no doubt when we do eventually get there and we get those headlines, we could be seeing, gold sharply higher again, even $100 in an hour, and targeting somewhere up towards 3,000. So look, you can't be selling gold. Silver also, we talked about short-term targets up towards $35. Silver is right there now. Obviously breaking 35, it's going to want higher again, and traders are now looking out towards $40 on silver. So again, just like gold, you can't really be selling silver either. And both precious metals are ignoring what's happening with yields, because yields normally take those precious metals higher, and also the stronger dollar. So it just goes to show how bullish these markets actually are. All right, finally, we do have a Bank of Canada meeting tonight. Market is now starting to lean more towards 50 basis point cut tonight than 25 basis points. So the Canadian dollar is struggling. Dollar CAD is trading above 138. Obviously, if we do get that 50 basis point cut, I'd imagine that dollar CAD will continue to trend north. And potentially we may even be looking at 140 targets on dollar CAD in the short term. So I wouldn't be trying to sell dollar CAD at the moment. Anyway, so look, good luck on the trades, and we'll catch back with you shortly.